Hello and welcome. My name is Darren Bauer from Mortgage Intelligence and TorontoMortgageSite.ca. Welcome to my YouTube channel. Today we're going to have a educational video tutorial on using a mortgage broker. And some of the topics we're going to go over are: what are the advantages in using a mortgage broker? Which lenders does a mortgage broker use? Why do mortgage brokers have better interest rates than banks? And how an experienced mortgage broker can help you. So the advantages. Mortgage brokers have multiple lenders and product options to choose from. This helps borrowers in giving them multiple options for their financing for all kinds of scenarios, whether somebody has good credit or bad credit, no down payment or lots of down payment, and different types of properties. Lower mortgage rates from non-bank lenders. A lot of mortgage brokers use what are called non-bank lenders. These are advantageous in different ways, generally because the non-bank lenders have low mortgage rates because of the way they operate, and typically lower than banks, but also because of the product selection and variety of products available to the borrower, which can help the borrower get financing easier and give them a wider range of financing options as well. Faster service with mortgage brokers. The typical turnaround time is usually about 24 hours. My experience, that is the norm. A lot of banks can take up to 3-4 days for a mortgage approval. I find that my clients are a lot happier knowing that their mortgage turnaround time for their approval is 24 hours or less. No broker fees for most mortgage transactions, pretty much 90-95% of the time. When you send an application to a mortgage broker, there's no fees involved from that broker. The compensation comes from the lenders, and this is obviously advantageous to the borrower. They're getting a service really for free with no broker fees involved. One of the biggest myths there probably is over the years is that mortgage brokers charge fees. Well, like I said, 95% of the time they don't. With a mortgage broker, only one application is needed. And this saves you a lot of time because one application could be sent to multiple lenders, okay, if necessary. So there's no repulling of credit over and over and over as if you were to go from bank to bank to do your mortgage. So lenders a mortgage broker will use, majority of the time, like myself, I'll be using what's called non-bank monoline lenders. These are lenders that are sometimes funded by the banks, believe it or not, and then have their own investor sources as well for the mortgage funds. Some of those lenders are First National, MCAP, Street Capital, CMLS, Merix, Industrial Alliance, etc. There's quite a few more. You could Google these lenders yourself and see on their website a lot of the products and borrowing solutions that they have. Also have trust companies such as Home Trust, Effort Trust. We do have banks. Scotiabank and TD Bank are broker lenders. We use them when we need to. Credit unions, Meridian Duca, they have some added flexibility as well. And then there are private lenders and syndicated mortgage companies. These are for mortgages that cannot be placed with typical lenders, and kind of a last resort scenario, but can be helpful for many borrowers that are having trouble getting financing, depending on their situation or maybe the property type. Okay, so monoline non-bank lenders, what these are really lenders that are funded by, like I said, by banks and other investor sources. They operate with lower overhead. They don't have branches all over, but what they do have is head offices and admin staff with online portals to check your mortgage balances, your payments. They have toll-free customer service, generally operating beyond regular business hours. very good service in general, and these lower overhead costs mean lower rates for the client in general. So people ask me, oh, if I get them a mortgage from First National or Street Capital, etc., how come the rate's so much lower than my bank? Well, this is part of the reason: lower overhead costs, and the way they operate is advantageous for the client. And of course, a wider variety of products, flexible underwriting, faster service, and all these mortgages typically come with standard mortgage terms and features, such as prepayment privileges, anywhere from 15 to 20%, double up on payments. Mortgages are portable and assumable, for example. So all the regular terms are there that you would find with a bank anyway, and a lot of the times better. These companies are established for years, proven track records. Many of these companies have been around for 10, 15, 20, 25 years. And majority of my clients are with these lenders, are very happy. I've gotten a lot of great feedback from the customer service they receive from these lenders as well. Major point with non-bank monoline lenders, a lot of them have cheaper penalty calculations than the banks because of the way they calculate, for example, an interest rate differential. If you've read the news in the last couple of years, you've heard a lot of banks charging a lot of money to clients because of the way they were calculating interest rate differentials for penalties on fixed rate mortgages typically. Many non-bank lenders have much better calculations for their clients. So that is a big advantage down the road if you happen to sell your property, let's say, and you need to discharge that mortgage in full and you're not porting it. So you are looking for a lower rate. Well, use a mortgage broker. Like I said again, with non-bank lenders, there's a large selection, many different low mortgage rate promotions and special offers. We have a variety of lenders that are always sending us new offers pretty much every week, different kinds of offers for different terms, whether fixed or variable. Brokers in general that are busy, like ourselves, have large volumes with many of these lenders, and we have top status with them, which means they will give us a better rate to pass on to our clients. Okay, and then once again, just want to reiterate, better penalty calculations. This is important. You don't want to be stuck with a mortgage where you're going to have an IRD penalty that's going to cost you a lot of money down the road, and this is something that we have with our lenders. So about experience and using a mortgage broker. Experience matters. When you use a mortgage broker that has industry experience for years, I've been in business for 12 years. When you use a mortgage broker with experience, they'll have the knowledge to help you make better decisions with your financing. They've seen many different types of applications all across the spectrum. They're aware of all kinds of different lender products, multiple lender products, different policies, underwriting guidelines. So the experience is there in terms of what lenders do and what can be approved and what cannot. This is advantageous to the borrower because when you're using a broker, you're allowing that broker to source the financing you need from multiple options, multiple lenders. Okay, if you go to a bank, you're stuck with that particular bank's products. Okay, so let's say you have your own bank, you go into the branch, you're only going to be able to use their products, their underwriting guidelines, for example. You're really handcuffing yourself to that bank. And in my opinion, banks typically employ what they call financial advisors in branches, and they're not specialists in mortgage a lot of the times. They're there to sell all kinds of products. There's some maybe trying to sell investments, insurance, different banking services beyond mortgages. So they're not experts in mortgages, in my opinion, because they don't do mortgages 24/7 like many brokers do. Okay, and they don't understand the industry as well because they can't handle as many different types of applications. They do not have the different product selection that a broker has through multiple lenders, and in my opinion, they don't have the knowledge and experience a lot of the time. And I've had many clients come to me for a mortgage because they were disappointed with what their bank had to offer, and we've managed to set up those clients with a great mortgage, a very low rate, lower than what their bank was offering, and get them a great deal. So I hope you learned something today about how a mortgage broker operates. If you want to contact me anytime, my information's on the screen. You can visit my website, torontomortgagesite.ca. Toll-free and local numbers are there. Email me for any info or call. Please follow my Twitter account. I post updates on there, different industry news, rate updates, etc. And if you enjoyed this video and you learned something from it, please like it, share it with your friends, family, business associates. Leave a comment for if you like this video. If there's something that was missing you want to know about, let me know. Leave a comment, because there'll be more videos to come. And subscribe to this channel. There'll be more videos coming soon. So if you subscribe to this channel, you'll get notifications of new videos on the way. Thanks for listening, and if you have any questions, let me know.